There's enough content in this from a data standpoint in this presentation that will last you weeks. I mean, you can pull out as much as you want. So let's hop in. It's exciting stuff. What's not exciting, unfortunately, is rates. According to Mortgage News Daily, 7.43. Ouch. We've gotten kicked in the gut the last couple of weeks. You can see this. Look, this downward slide of just getting beat up. Remember, guys, red is bad. Down is bad in this case. It means higher rates. And you can see it's all been, well, whether you know it or not, it's been due to one major thing, this guy, right? So the Fed has basically said inflation numbers have come out hotter than expected. The only reason why we got a little bounce back yesterday, you saw that green in the moment before, is that Jerome Powell did come out and say he thinks that rates are okay where they are, meaning not higher. But for the last 2 weeks, inflation numbers, job reports, all these things have come out to show a much stronger economy and stronger inflation numbers. That's not good because, again, that's just, it means that if they do cut rates, it just spurs that on and creates more and more inflation. So, but the good news is, at least yesterday, they came out and said, hey, they still think rates are where they should be at this moment, meaning no rate increases. So that's a big differentiation between earlier this year, just literally 4 months ago. They were saying, oh, 3 cuts this year. They're now down to possibly 1 or 2. Time will tell. I think it's going to be closer to 1 at the end of the year if it does happen. Here's the data I mentioned. Check this out. There's a lot of good stuff. I would take this and parse it out and make your own, whatever you want, whatever part you want to highlight. But the idea here is that the annualized pace for homes of existing homes being sold is 2 million units annualized. Like the whole year for existing homes is 4.2 million homes being sold. That's crazy. That's not a real big number, and that's going down. The average, or the median, not the average, there is a difference. The middle, meaning like the median home price is still just a touch under 400,000, but that's a 4.8 year-over-year appreciation or increase. So again, it's the median home. It's not an average. Call it about the same. It means the middle home. Like if of all these homes, the middle number is up 4.8 year over year. So housings continue to get more expensive, or the more expensive ones are still for sale. Inventory, there's still about 1.1 million units there. That's up. That's good. 14% year over year. That is a good thing. We now have a 3.2 month supply that's still shy of a normal market of 4.6. So guys, we've been saying it. You live it. We understand it. There's still a housing shortage, and the average days on the market, 33 days, down from 38. So I got some more stats to show you here in a minute, but I thought these other pieces down below are really interesting. As far as list over sold, first time home buyer, cash, investors, you see the numbers. Here's the charts. I love this stuff. I think this is real interesting. But your first time home buyers, you can see any given market for the last, call it 3 years, give or take, they've been 26 to 32%, and it's about the highest they've been. First time home buyers right now in March of 2024, with the most recent data, it's the highest it's been in the last 3 or 4 years, even with rates showing, like we showed earlier, 7 point whatever. Even with rates there, the first time home buyers are making a huge percentage of the market. So go after them. The all cash deals down, which a little surprising. Well, I guess not surprising, right? Because this when rates were coming down in March. They were probably the high 6s at the time. So it makes sense that more and more people will finance when the rates come down. I suspect that'll probably go up here in the near months with the rates going back in the 7s. And then the bottom right, I think is both right, I should say. Look at the top right, the percentage of properties sold above the list price. Guys, almost a third, 30%. Almost a third of the market is still going sold, not listed, sold above the list price. That's amazing to me. 1 out of 3. The average number of offers received per sale or per transaction, over 3. So again, people are like, I'm waiting for the market to correct, waiting for house prices to come down. I don't see it. Again, inventory is low, supply and demand kicks in, not as much supply, that demand's still there. Prices are going to keep going up. So I think share any of this data with your folks. Again, a lot of data here. You guys can take this and use it over the next coming weeks to market to your database and let them know now is a good time to buy, because while the rates are up, not as many buyers are probably going to be out there. Maybe they can't qualify or just don't want to. The reality is now is a great time because housing is going to keep getting more expensive. And again, buy while you can because the rate won't be forever. Good news on the whole, National Association of Realtors, the lawsuit, Fannie and Freddie, because this is one concern. Fannie and Freddie has said that if the seller does want to pay the buyer's realtor, so the selling agent, if they do want to pay them, it will not count as part of like what they call interested party contributions. So in other words, you don't have to worry about it. The standing freighter base saying, hey, we'll be cool. We'll allow it to happen. They can pay him and not go against the borrower as far as seller concessions. That's big news. So we'll see. Obviously, nothing's set in stone yet, but that's at least a good indicator for what's to come. Housing. So now let's talk construction for a minute. Housing starts. They fell 14% in March. Again, I think a lot of that's just because the market got soft when rates went up a little bit more than expected again this year. You guys can see the numbers here, but what was interesting to me is with that stat, somewhere else I read, builder confidence is unchanged. Even with the 14% drop in starts, they're still saying the confidence is about unchanged compared to March. I thought that was interesting. This, I just nerding out to graphs. Look at this little pie chart. Just tells you where the cost of builders that are watching this, compare this, see if this is accurate. I'd love to know your feedback. But check it out for where money gets spent. Again, just sharing that with you. The average sales price of a single family home in 2022 was 644, whatever thousand, according to the National Association of Home Builders. That seems high, but it also makes sense because again, if you're building new construction, you're using today's cost, today's labor cost, supplies, all that stuff. So much, again, just throwing a chart out there to educate you. Top 10 where Gen Zs are. None of them are here in Texas. None of them are on the West Coast. So the Gen Zers, they're all going to be Midwesterners and a little bit of the East Coast. I just thought that was interesting. Good for you guys. Go Gen Zers. Call it 80% of homeowners, 79. So it is down, meaning less and less are feeling trapped. But set from 82 to 79, still feel like they're trapped or locked in, if you want to call it that, because they got a really, really good rate. The good news is the numbers are coming down. So if you look at each one of these bullet points, little by little, less and less people are feeling like, it's okay to get more. The way to say this, more and more people are feeling it's okay to give up that 3%. So over time, things are going to happen where people get married, they get divorced, they change jobs, relocated, downsize, upsize. People will get rid of these low rates, which will help then encourage folks to then buy and sell more. It takes time, but the good news is it's at least trending that direction where people are realizing rates not everything. The 1-year change of housing activity. Go Texas. Truthfully, look at Florida. That is just good for Florida. I mean, they win hands down. Texas, just from the big picture, we're probably close second. We're really about third. Because if you look at the Alabama, Mississippi, good for them. Georgia, like whatever, good for them. But the reality is Texas, go Texas. Hey, and you Northwesterners, Pacific Northwest folks, good for you guys. You're in the 20s. Proud of you. Monthly lock by volume. I just, again, mortgage nerd here, just the purchase, the cash out, the rate and term. Look at how the refinance is no surprise, right? But just look how the refinance just evaporated. And for the last, call it year to year and a half, it's primarily been purchased. Nobody's surprised by this, but that market's usually refis are about 25% in a normal market. We went from extreme. We went from like massive refis to then none. Fun stuff. DFW, no longer the second busiest airport. I'm okay with that. Now, technically, we're third is what it is, but I didn't even know DFW is the third busiest in the world. Who knew? Atlanta, good for you guys. I believe it. I avoid Atlanta at all cost. And this was interesting. Speaking of Atlanta and, airlines and all that stuff from Atlanta to LA, like there are apparently real life stowaways. Like people still try to take free flights and stay on a plane longer than they should. And in this instance, if you read the article, it's just people are literally getting handcuffed and drug off because they're hiding in bathrooms and they're staying on. It just doesn't make sense. The plane's not that big, but thought that was interesting. And then again, kind of doing the similar theme, read this article where people got rescued for writing help in the palm trees, but look where they were. I mean, it's out in the middle of nowhere, this little island. And I want to say, I forget, but it was a week. They lived on this little island, which is crazy. And lastly, going back to some real estate stuff, DFW is apparently among the top 10 most active markets for investments. Good for us. You see Austin's in there. You see little maps, fun stuff on the left for where they think it's a good place to invest. So good for us. If you're here in Texas watching this, good for Dallas Fort Worth. And lastly, guys, a good reminder. You help enough people get what they want, you're going to get what you want. That's my summary of Zig Ziglar, the GOAT, one of the GOATs. I say that because I just had a meeting this morning with a guy. He's one of the best. He came in and the whole meeting, he just gave me names and names and names. He's going to follow up and send me, I think, 5 people that I need to know. He was truly, truly, truly here to help, to see what he can do to help my business. He's a UBS financial advisor. And the dude just helped. Tour. By the time I was done, I'm like, dang, I need to help this dude. So I'm going to try to introduce him to 2 or 3 folks that I think would help him in his business. But again, guys, just take that attitude, give first, and it'll all come back later. And then lastly, the meme of the week. I do enjoy this one. If you haven't been to my Instagram lately or ever, please go. This one's great. It's the first time ever I'm exploiting my kids and my nieces. I think it's really cute. It was really fun doing it. I loved it. It was a good Saturday afternoon. So check that one out. It's after the Montana boys, whoever they are. I do know who they are now, but my wife introduced me to them. So there you go. And let's get social. As I mentioned, follow, subscribe, like, all that fun stuff. As always, we appreciate you. We'll be here and around this week. And if you need us, have a great week, and we'll see you next week.